Welcome to the Total Money Management Podcast. We're covering the week that was May 19 to 23. How are we doing, gentlemen?
Hello.
Top of the world, top of the world.
It's a bit chilly now.
It's beautiful, mate, beautiful.
You got your jacket on.
You're English.
No, I shouldn't be
You
cold.
got your t-shirt on?
He's probably sweating.
Yeah.
Now, first of all, just a quick, and I did this in the week that was video, thoughts seriously to the people in New South Wales. The flooding down there is absolutely horrendous.
Yeah.
I was watching the footy on Thursday night, and it was just the whole game, it just rained. But it wasn't like, oh, it's sprinkling. It was just like somebody had turned a hose on. It's just crazy.
There's been a couple of deaths as well down there, isn't there?
I think there's 4
Yeah.
now. But it just, one of the fellas I talked to, shout out to Chris, it was just like, mate, it never stops raining down there. It's every time I look at Sydney, it's just like, oh, yeah, it's another raging storm somewhere. It's just mad. Just mad. Anyway, I just thought I'd let that out.
That's very nice of you, Stephen.
Thanks, Steve.
Righto.
That's very thoughtful.
Righto, what's the big issue?
Well, the big issue, ongoing China-US stuff. You posted an insert from a really good YouTube video, which we'll link because it's worth a watch. I think it goes for a little over an hour. But effectively sitting there thinking about, okay, what's going to happen here? Australia's going to have to pick a side at some point.
Yep.
Presumably we're going to side with the US.
Yep.
They're building a military base up in Northern Queensland or Northern Territory rather.
Yep.
And if eventually, which would make sense, if we're asked to stop selling iron ore to China because they're using that iron ore to build weapons and they're threatening us, like where does that leave us? Like for the last 30 years, we've done very well of selling our commodities to China. So.
Yeah, we did it with Japan post the war. The issue with Japan was that the Japanese were never a threat, right? After the war, the Americans sort of went, righto, we'll bring the Germans and the Japanese into the fold with economic development, right? Because at that stage we were warding off communism, right? And the communism sweeping the world was a serious threat, right, with Russia. So the Japanese came to us and went, we actually wanted all the iron ore and all that stuff you got down there. And we went, oh, okay, let's sell it to you. So that's what we did. But Japan was never a threat to the US or to the US's hegemony over the world, right? But so it was never a problem where the US were going, you guys are sending all that iron ore to Japan. The US was actually saying, well, that's good because, we're growing the economies and they're capitalists. The problem this time is, and we've highlighted this for a while, is the Chinese are not capitalists. They're state communists. So it's a different story. And so that's why it's changed now. And at some point, we're going to have to make a decision. So is everybody.
I understand the impact potentially on a macro level, like a country-to-country level, but how does that impact the everyday Aussie or just the everyday person?
Well, my argument is this: one of the benefits of basically having a lot of natural resources is it's good and bad, right? One of the arguments is, Australia's got all this iron ore and it's got all this wheat and it's got all these minerals and it's, we should be making stuff, right? And this gets sort of deep into economic theory, but Australia sort of went, listen, we can't build cars competitively. Give it the flick. We'll sell iron ore to the Japanese and they'll build a car and they'll send it back to us. They get the iron ore. We get the car. Cool, everybody's happy, right? So that's generally the way it's supposed to work, right? Called comparative advantage, right? So I think the benefit this time for Australia is that like we sort of transition from Japan to China making stuff, right? So we went to Japan and they went, we'll make your cars. And we went, cool, great. Then China came along and they said, listen, we want your iron ore and we'll make your cars. And we went, okay, cool, great, right? So what my argument is, it's actually quite positive for Australia over the next decade or two on two parts. One is we've got a lot of material resources and that's becoming more important, right? Just making stuff. The second part is if the world needs, let's say 10 million cars, right, a year. It doesn't matter whether we sell iron ore to China or to Thailand or to Malaysia or India, right? We're still selling the iron ore because everybody needs that to make the cars.
We still got the goods.
We've still got the goods, and we basically what we're saying is, listen, if you guys all want to cut your throats over a 2% margin on making cars, fine by us. We'll still sell the iron ore. We don't care who we sell it to, but you're all competing for our iron ore.
Yeah.
Right? So we don't care if it's Japan or China or India, right?
Well, Australian exports to China are worth almost 10 times that to the US. So we're obviously not looking to ruffle too many feathers as much as possible.
Well, yeah, the US-Australian alliance is really one based on ideology, right? And, we both believe in free markets and democracy and the rule of law and that stuff. China doesn't do that. They don't believe in democracy, right? They're a communist country. They don't really believe in free markets, right? So the difference is Japan was our ally. China is now becoming a strategic threat, right? So that's where, and Australia's always had this a little bit of, and this is what Paul Keating went through with, we're part of Asia. And all us white people down here are going, oh my God, no, we're not, we're all British, right? And it's like, guys, we're in Asia. And it's like, yeah, but we're British, right? So there was the reality is we're in Asia, right? But it's a hangover from...
I mean, geographically, we're just closer. So, of course,
absolutely.
Of course, we're going to have more to do with them.
Yep, and that's the argument, right? But the problem is the big one in our region, China, is communist.
Yeah.
Right? So they want to have more influence in our region, and that's why they're going to talk to all these little islands, right? Because they want to put a military base there and all that sort of
control.
Stuff. Yeah.
All right. Well, that makes sense. Let's talk about the stock market for a bit. It was only a month or so ago that everyone was extremely fearful, and we've got the fear and greed index here. So this is the current one from, I think, mid-May. But 4 weeks ago, the fear and greed index was extreme fear.
Yeah.
So it just shows how fickle we are.
Now it's greed.
Now we're extremely greedy again.
This week.
Well, exactly. It's like
4 weeks later. Short memories.
The bottom line is the US market's still overvalued, and we're expecting a long-term kind of yield to be quite average. But right now, we're greedy.
We're all
buying,
in, mate.
And it's retail as well. The amount of retail buyers, I saw on the chart, I don't think we've got it, is the highest ever.
Yep.
So
which is a red flag.
A huge red flag.
Yeah. But even
what are the margin levels at?
Well, they're still fairly high. But just, like this is Saturday, right? But Friday, last night, US, Trump came out. The futures were down. The futures were up 0.1, right, at about 3 o'clock Australian time. Then, Donaldo came out and said, I'm going to put 50% tariffs on Europe, right? So the
is that what it was?
Yeah. And then futures went zoot and went down to minus 1.4, right, in a nanosecond. And then I checked this morning, I think they finished down about 0.4 or something, right? So not cataclysmic. But that's what we've been talking about, this volatility where this guy opens his gob and the market moves and we can come back next week and that'll be extreme fear again.
Yeah.
Right?
Yeah. Almost 2% swings are becoming pretty
yeah,
usual.
Exactly right, Tom.
Yeah.
Right? So, and it's really hard because you're sitting here going, cool, yeah, good week. Yeah, things are really bumping along. Next minute it's like, holy Jesus.
I'm finding like I'll rebalance. And then that afternoon, I'm like, I should have rebalanced in the afternoon.
Yeah.
Like, I might rebalance again.
Yeah. Or you rebalance in the morning, right, and you take a profit.
Yeah.
And then in the afternoon, you go, actually, I should be buying more, right, because it's flipped.
Yeah.
It's just it's really hard in that sense. If you stay systematic, it's fine. But I'm the same. It opens up 1.5 and you think, oh, cool, good day. You rebalance, but it ends up the day up 0.2.
Yeah.
I know. It's like, oh, okay.
Log on after work and go,
Yeah, I thought we were going to have a really good day. Yeah. And that's what's going on. Donald Trump can flip the switch, right, with one statement, right? And we're not really used to presidents coming out doing that stuff, right? So Biden never commented about that stuff, right? Not a word, right? But Donald comes out and says stuff like that, and everybody goes, "Holy fuck!"
Yeah, so jump. Well, the industry keeps saying buy the dip, but it's even making it hard for those guys now because the dip doesn't last.
Yeah.
So, and the other thing I wanted to talk about was the entry to buy things just in any stock market now is much easier than it was.
Yeah.
So, Donald Trump comes out with a statement, and retail investors open up their phone and go buy,
Bing.
sell.
Yeah.
And
Uber drivers are day trading again.
Well, exactly, and that's why we're seeing this like extreme fear, extreme greed, extreme fear, extreme greed.
Yeah. It's there's a lot of speculation in the market, and it's partly because we're I won't say we're at the market top, but the market's expensive, and this is what you see, right? Because we've been going on for so long. There's no one left going, oh, I don't know about the stock market. Everybody's now like, yeah, get into the stock market, right?
Yeah.
Get into Bitcoin, get into options. You know, you can make covered calls, right? Everybody's trading shit.
There's so many, like we speak about pretty regularly, all the Facebook groups, all it takes is someone to hire a Lamborghini for a day, start a group, and tell everyone that they're making millions.
Yeah,
and, know, because everyone likes the idea of a get-rich-quick scheme, and for whatever reason, the stock market and crypto seems to be that.
Well, it's
for a lot of
sexy. It's
people.
sexy.
Money is.
Well, it's quick.
Yeah.
It
It's
is
quick.
fast. Speaking of
What's Bitcoin?
markets and crypto,
What's Bitcoin now? 110.
110. It had 3% down overnight, but
that was US though.
Yeah.
110 US.
170 Australian.
Jesus.
Mate, Steve, Jacob's been trying to tell you for a while.
I know. Look,
Just buy a coin.
I know. No, I'm not buying any of it. All right.
Just buy a coin, mate.
Funnily enough, last night I thought, we should take some of our money, that we've got, and we should buy a coin. I thought, Stephen, don't go there. Don't go there.
Funny.
Mate, you don't need to give me much excuse.
I'm in.
No, like in all
Stephen
seriousness,
lose the coin.
we know that it's dangerous, and Steve and I go backwards and forwards quite regularly on it. But
I'm still waiting for the day where I go, told you.
I know, right? I'll be on my private jet by then. But no, it's about the systematic. I don't want to derail the podcast too much, but it's about just having this again a systematic approach.
Yeah.
When to get in, when to get out.
No, I agree. When you told me the way you do it, I thought, okay, fine, that sounds right. You're minimising your chance of having a big loss. Okay, cool.
Yeah.
And it's got a shitload of volatility where you can make a lot of money.
You can rebalance multiple times a day.
Absolutely. Yeah. But that's what I mean. That's the importance of understanding volatility.
Yeah.
Instead of going, oh my God, this is terrible, you're going, this is fantastic, right? Why? Because you're actively managing the portfolio.
Exactly.
Right?
You going to join in, Steve?
Sorry?
You going to join in?
No.
Stay tuned for Steve's coin.
Steve coin.
Steve coin.
I will never be converted. I'm Charlie Munger.
Well, homeowners are happy.
Mortgage owners are happy.
Well, that's what I mean, yeah.
Homeowners shouldn't be happy, but they are happy because everybody's just insanely buying houses.
Yep. So what do you
So,
reckon?
well, we're going to go into this a little bit longer on our the third, what do you call it? The third installment of our trilogy on property.
Yep.
But yeah, there's a couple of things I notice. The first thing when they talk about rate cuts, only Australia is the ones where the rate is forecast like on the news, right? Oh my God, stand by, the Reserve Bank is going to make a call, right? And everybody's like glued to the TV like the Melbourne Cup, right? Because they're all bloody mortgage holders. But it really depends, because if you're old like me and say, well, I want higher rates because I just want to stick my money in a term deposit or bonds and get 6%, which I can live off, and you cut it to 5.75, I'm going, well, I'm losing money, right, because I'm not getting paid as much. The mortgage holder is going, thank God my mortgage has gone from, $1,000 a week to $975 a week, right, which I find very trivial, but anyway. But the point being, there's winners and losers out of all of it. But I think broadly, the idea of, this will be controversial, the idea of, you cut it 0.25% and boom, the housing market again I think is incorrect. Now, it doesn't mean that house prices won't go up, But my argument is the reason why they're cutting rates is because the economy is not doing that well. The economy is in my mind, is quite fragile, right? Because, see, here I go again, in my day, full employment was people who had, 8-hour day jobs, right? 40 hours a week and you got your pay packet. It was really stable. And full employment was basically 95%. So if we had 5% unemployment, that was deemed full employment. And the 5% were people who were itinerant workers, people who were temporarily moving. I've quit my job in Queensland and I'm going to Melbourne, right? But I'm currently unemployed, but I'm going to get a job in Melbourne, right? So there was that. They considered 5% unemployment still to be full employment. Now we've got lower that, and they're saying, it's full employment. But the problem is that there's a bucket load of people who are working part-time, right? Or there's a bucket load of people who are working 36 hours, but they're not getting paid enough.
Yeah.
Right? So that's why I argue full employment is not a really good indicator of the economy. If you look at the government deficit, which I don't know, did I? Yeah, I put it in on Wednesday, Jacob. If you look at GDP growth, right, they've got it trending up, right? But it's still miserable. A 26-27 financial year is 2.2%, right? Well, if inflation's at 2%, that means nominal real growth is zero.
Yeah, which is what they're not saying. And when you compare it to countries like the US before Trump, what were they were running at 4 or
They're
something?
like 5 or 6%, right? And this is why I'm going to talk about the importance of government deficits, because the US is absolutely killing it because they spent a shitload of money in COVID, right? A lot of other places, including Australia, basically didn't spend much. And Albo and Chalmers continue to talk about government surpluses, right? Well, if the government takes in more money than it gives out, that's not real good for the economy.
Yeah, I think there's a huge misconception
There
about
is.
government spending.
Yeah,
There is, Tom. And we're going to talk about that because it's a really important point. Because I see so many, so-called experts on Twitter carrying on about, the government's profligate spending. It's like, mate, it's like 1% of GDP. It's loose change.
I think a lot of the misconception comes, I could be wrong, but from the lefties going, we're in debt forever. We're going to pass this debt to our kids. We're ruining the future. Debt, how bad debt is. And no one's talking about how you need to spend money in order to grow the economy, to build businesses, to give people jobs.
Look at the US, mate, right? The government came out during COVID. Biden came out with the Inflation Reduction Act and the CHIPS Act, right? And he said, we're going to spend a bucket load of money. Oh, my God, this is terrible. The place is going bloody gangbusters.
Yeah.
Right?
Yeah.
That's, hello, there might be a connection there. But, of course, now they're all freaking out because the government's got all this debt. And it's like, mate, they've had all this debt for years. Have you guys worked out yet that that's the way, that's the way you get rich off the government providing the money?
Yeah. They just print it.
We probably need to make a balanced argument or approach to what happens if we pay all the debt back versus what happens if we spend more and grow more, and what the pros and cons are of each.
Yeah, the government, look, let's not get off track. But the short story, stop worrying about the government deficit, right? If it gets to 10% of GDP, give me a yell, right? But up until then, there is zero evidence in developed countries where there's raging inflation because of the government deficit. There you go. That'll get heaps of comments.
That's going to annoy at least 50% of the people.
Absolutely.
Thank you, Stephen. Thursday. So mean reversion, something we talk about, one of our 8 principles. Look, we haven't had, especially the US market, hasn't reverted to the mean for a long time, which is more, if you're a betting man or a betting woman, you probably put some money on the fact that it will sometime soon.
It has a couple of times for a week.
Yeah, well, COVID.
Yeah.
We had a glory month in COVID, right? February 2020. Told you.
That was ridiculous.
Yes, well, it went down. But that's an exceptional circumstance, right?
Yeah.
I think it's even more exceptional that it bounced back 30%.
Yeah. It went higher.
Do you interesting note, do you class the COVID fall as a recession?
I personally don't. They see anything greater than 20% fall is considered a bear market.
Yeah.
And there's two bear markets. There's cyclical bear market, which is what I think happened. We had a bear market cyclically within a secular bull market. Right? So in other words, big picture, we're still in a bull market. Short picture, yeah, we had a bit of a, buy the dip, right? And that throws a lot of things out, a lot of ratios and stuff. But as I say, the Cape ratio only ever fell, I think it didn't fall much below 30, if I remember correctly, right? Even though it lost 30%.
Well, you see the all these people pumping out stock market stats of whenever the stock market falls this much, there's usually a 10-year bull market afterwards.
Yeah.
I'm looking at it going, no, like it's a separate secular bull market.
Yeah, it didn't last long enough to count.
Yeah, essentially, yeah.
Well, but also too,
You know about that, wouldn't you?
Yeah.
we talked about this last week with that chart saying, what are you guys talking about?
Don't worry.
Doesn't matter.
Last week we talked about the chart where people go, oh, you should buy it when it hits the 200-day moving average.
Yes.
Right? And it's like, yeah, but you've only doing that for 10 years.
There's
You've got to get the stats over 100 years, not 10 years.
Yeah. Yeah. Is there any other point you want to make on this mean reversion chart, do you?
No, I've just been banging on about it all the time. One day it'll happen and I will be the king.
You'll be Mr. Told You So. We'll get you a shirt, mate.
That's exactly right. We're gonna have a half an hour session of Steve was bloody well right, and here's why across 15 questions.
Only half an hour. Jesus.
Well, it's a series.
Part 1 of 8.
Friday. That is a very funny graph you got there. Yeah.
Yeah.
So basically, for anyone who doesn't look at the document, on April 8, Charlie Blello posted, will the US economy fall into a recession in 2025? 66.9% of people voted yes. A month later, he asked the same question and 64% of people said no.
Yep.
Yep.
Fickle, mate. Fickle.
Humans.
Right? Stop bothering with surveys and stop listening to people and just look at valuations.
We're magpies. We look at the shiny thing.
Yeah. Right?
Recency bias.
Yes. All of that. Very good, Tom. Investor sentiment, all that sort of stuff. My favourite part of the show.
Stop talking about
Elon.
Elon Musk, mate.
Elon.
Is there again? Well, they're up 45% over the last month, so Tesla.
Oh, yeah, well, like I just said, that's sentiment.
PE ratio of
But look at-
192.
I still think
That's low.
good point, Tom.
I
Nice.
did.
That's
I
low
did
for
read,
Tesla.
I did watch this where he said he wasn't going to spend on
Politics
anymore.
Yep.
Yeah.
I've had enough.
But he came out, I think yesterday he came out and said, bearing in mind, this is, pardon me, Mr. Genius in 2014 who said self-driving cars by 2015. Right? Here we are, 11 years later, and what does Elon drag out yesterday? Robo-taxis, right? We're going to have thousands of robo-taxis
They're
by
a
the
thing
end
in
of the year.
They're a thing in the US.
They do exist.
Mate,
They're 100% a thing.
bullshit.
Dude,
Go and look at them.
Yeah.
There's about 100,000 of them operating.
Okay, so yeah,
in
they're
limited like 5 cities.
Yeah, they're still
Right?
real.
Oh, Jesus.
Come on, mate.
Seriously.
Keep up.
Come on.
Keep up.
I would be way too terrified to even go in one.
Absolutely. 100%.
Sit in the back and just run off a bridge or something.
Yeah. Oh, oops, sorry. You're just a statistic.
Oh, well, let's get you even more riled up, Steve, because this had some traction on the socials this week, of straight line compound interest, or straight line compounding is at a 7% annual rate of return. So this is
Lies. It's all lies.
so basically, if you've never invested before, this is probably one of the first charts you'll ever see and go, well, I'm going to be a millionaire in 10 years.
Yeah.
I'm on
I
track. I've got 100 grand, so
Yeah.
And I just invest 10 grand. That's $200 a week, by the way. So 10 grand, you'd have to be earning probably 100 to put away 10 grand.
Investing 10K a year at 7%. Yeah.
Right. So every week you put away 200.
Yeah.
Right. Okay. And then you're getting an annual rate of 7%. Okay. So here's the challenge. Please put a chart on the socials in response. We put that on the socials where you have a stock market that goes up 7% every single year for how long's this? 10 years.
I know it's like 30 years, mate.
Yeah, there's a chart right here.
Right, yep.
There's a chart right here.
There you go.
Yeah,
and I can tell you what, you ain't going to goddamn find one.
Yeah, well, one of our subscribers did that. I think he back tested.
No, he did. Yes, he did it, but he did a 30-year period, which is fine. That's not too bad, right? But again, the point he said, the nominal was 7, right? Which is what these guys are talking about. They're not talking about the volatility drag or what we go on about, which is plus 100. What is it? Plus 50. Minus 30, you don't end up with 20%, right? Because your minus 30 is of a larger number.
Yeah, it'll at some point in there, you'll spend 10 years trying to catch up.
Yeah.
Get back to where you were.
He's like, backtested the strategy for a period of 31 years, ended 31st of March 2009, long enough period, it shouldn't matter which one I select. Lol. 7% guaranteed. Anyway, it came out with a real average rate of 3.3%.
That's what I mean. Now, read my response to him because it's, again, the starting point is really, really important. If you invest from 2009, you've made 14% compound.
Yeah.
But if you start in 2007, you make something like 4.
Yeah.
Right? So there's a really, actually, it's about 8. But this is why I'm saying these charts are bullshit, right? Because they mislead people into going, oh, I'm going to put away, the first 100,000 is the hardest. And then after that, dude, it's just cruisy. It's not. It's not like that, right? And that's why I get cranky because, the people who posted this should goddamn know better, right? But they don't, and they all do it, right? And it's deceiving it's doing a disservice to people. Right, it's like going to a bank, right? And you say, how much do I get? And they go, oh yeah, it's 5%. And you go, oh cool, okay. And you come back 10 years later, and they give you half of the money of what you expected. And you go, hang on, you said 5%. Oh no, that was on average. No, the last 2 years it fell 20%. And you go, oh okay, but that's not how I thought it worked. No, but that's the real return. That's what's happening here. Yeah. Right, you're seeing these lovely charts, and I show people this in financial fibs and in one of the lessons. I can't remember what it is.
I think it's in well too.
Yeah. And so, but the point's really critical, right? You are not going to get a lovely 7% compound every year, right? Because that's not what markets do. The price changes, and the mathematics of it is really, really important. Right, and that's why I say this is the industry standard stuff. Oh, Tom, you're young. Just put your money in stocks, and it'll, here's this. Look at this lovely line. Go straight up. Yep. Oh, cool, great.
Put half your money in Vanguard
and Bitcoin.
Well, that's just the typical stuff you see. That's not me telling people to do that.
No. Yeah.
Well, it's a marketing ploy at the end of the day.
Yeah. Now, before we forget, by the time this episode comes out, it will be the last day to register interest for Market Mastery 1, live course that we're doing, teaching the 8 principles, going over financial fibs. We're also doing how to think about investing. It's going to be 12 weeks of live training with Steve. You'll get one-on-one Q&A, questions answered in real time. Every single module will be recorded.
I promise not to rage too much.
Well, you can't. Let's not.
That's what people buy.
Let's not write checks you can't cash, mate. All right.
All right, I'll be good. Oh, you guys.
Anyway, it should be good.
You young people are so boring these days.
Last day to register is going to be today.
Awesome. Thanks, Tommy.
Thank you, Tom.
We've done a bit of market research, and I have, and there's probably
excuse us. We've been busy doing nothing, folks.
Yeah.
Jacob's the central hub of this gig.
Bit of market research. Mate. Thank you, Google. There's a couple of talking points at the minute that people are mostly searching online, and one of them is AI stocks. And the question is...
I thought you were going to say Pornhub or something.
Well, that's just yours, mate.
Jeez, I walked into that one, didn't I?
It's AI stocks, and the question is it too late? So basically, is the sector about to take a bit of a stumble? They've obviously dominated the headlines year after year with Nvidia, Microsoft, AMD. They're getting a lot of industry funding, a lot of investor funding.
Yep.
And I think the question that people want to know, and we don't necessarily know the answer, is it too late to get in? It could be, it could not be. I think one of the main things to think about is what's the earnings yield. Most of them have high P ratios.
Yeah.
Well, it's kind of like in World 2 when you teach durable competitive advantages.
Perfect, Tom.
Whenever an industry kind of comes out,
Yeah.
right? Like
Yep.
everything's hot, everyone's buying everything, and then usually one or two survive.
Yep. Exactly, Tom.
I mean, look, let's be honest. NVIDIA doesn't look like it's going anywhere. That video you sent me was outrageous.
Yeah, they're getting a lot of funding. It's about valuation, and it feels bubbly. It feels like a frothy kind of market. Not just NVIDIA, but I'm talking about the whole market in general.
Yeah.
At one point, their market cap was more than our entire country.
Yes.
Like, so I'm sorry.
So
But the other one...
It's amazing. Like, NVIDIA's doing amazing things.
Yeah,
It
but...
doesn't mean that you're going to pay $19 million for
Exactly.
a stock.
Exactly. The other thing is too, I think there's a lot of bullshit around AI. I think that, and this is what you get every cycle, right? Oh man, this internet thing is going to make shops delete, right? Oh, okay, we're still all shopping, right?
Delete.
But that's probably not the right word, was it? But with AI, yesterday there was a post on Twitter that said, here's 20 fabulous things that AI is doing. And it's a fucking picture of a giraffe riding a bike down the middle of New York.
Cool.
It's like
I'm looking at that going, okay, so goddamn what?
like
But
NFTs.
Who gives a shit about...
Have you seen that before, though?
But what use is it, Tom? I'm building a nuclear weapon. Hey, dude, I just created a giraffe driving down New York on a motorbike. It's like, okay, Bob.
Well, I think... Look,
Sorry, but it's just, I do not get that part about where the value is. And I'm happy to be wrong, but what I'm saying is overall there's a lot of promises coming through and they're not delivering.
Yeah.
They keep walking back going, oh, ChatGPT 5 is going to be artificial general intelligence. No, not this month. We're still on.
ChatGPT 5 will go to work for you.
Yes.
I hope so.
Tie your shoes, pay your mortgage.
That's exactly right.
Well, I think, look, in terms
And it'll
of
do none of that.
answering the questions that people want to know, which is it too late to get in? I think what usually we'd say, maybe look at the ETF. Instead of going, yes, I'm going to make a 10 or a 15% compound return every year from this, it's, what's the downside? Let's be a little bit more cautious when we're investing into this. Have exposure if you want, but don't put all your eggs into it.
Focuses on not losing money when things are insanely overvalued.
Yeah.
Volatility comes. Volatility can destroy returns if you don't have a strategy that kind of deals with that.
Yep.
Like, I wouldn't even look twice. I'd just look at something cheap.
Yeah.
Well, it's so much.
There's other things to do. Like
Bitcoin.
If you look at energy, right? Energy is
Steve Coin.
Steve Coin. If you look at energy, it's insanely cheap, right? And I freely admit I'm not a growth stocks guy, right? And I'm not a growth stocks guy because I can't predict the future with any high degree of accuracy. But I can tell you oil's still going to be around in 20 or 30 years. Coal is still going to be around in 20 or 30 years. And likely, BHP and Woodside and Exxon, and they'll all be around in 20 years. Will NVIDIA be around in 20 years? At the moment, you look at it and go, oh, Steve, of course. Let me tell you, go back and look at history, right? There's plenty of them, Nortel in the internet bubble no longer exists, right? There's Blockbuster, right? Videos, Kodak cameras, right? All that stuff where you go, oh, mate, of course they'll be around. But you find that they get dissolved, right? They go bankrupt, they get bought out, they fade away, right? IBM is nothing like it used to be, right? But you look at NVIDIA now and go, oh, man, it's just going to take over the world. And I look at it and go, yeah, sorry, seen it all before. And like you said, Tom,
it's taken over the world already, I guess.
Well, it's taken over the markets,
yeah,
right? At a PE of, what is it, some insane 300 or something. It's
if that thing drops 20%, it's going to destroy.
Well, it knocks a bit of the market cap off.
Yeah, especially the weighted funds that are investing in it as well.
Yeah, well, I reckon it's just a momentum play. And again, at the top of the market, you see all kinds of crazy stuff.
So just be cautious. And I think to Steve's point, and to actually Tom's point, there are things out there that are much cheaper. Maybe don't give in to the FOMO if you want to. But that's one. We won't go into the next one till next week.
Why not?
Well,
we wobbled on too long.
We're going over.
Sneaking it, get me in that Bitcoin one you got.
You want to talk about the Bitcoin one?
No, you do.
All right. So
it's bullshit, folks. It's all bullshit. Don't buy it. Don't buy it. Cut the show off here, Dan.
Look, the question is, Bitcoin and gold. So they rarely rally together, which is quite interesting.
Right.
It's usually gold runs or Bitcoin runs, but they never really run together.
Why is that? Do you know?
I don't actually know.
Okay,
I think, my opinion is gold.
You're buying one or the other?
Yeah, my opinion is most big-time investors would hedge it into gold first. Now there's more industry exposure into Bitcoin. They're kind of doing both.
Yep.
And gold this year's ran at such a rate for the last 12 months.
Yep.
People are looking at going, oh, maybe we'll consider something like Bitcoin.
Yep. Well, the president likes it.
He likes all the crypto, or Trump coin. They're both obviously seen as inflation hedges. Gold's the gold standard inflation hedge, or precious metals in general. But Bitcoin's the quote unquote digital gold. Gold's hit new highs recently. It's broken over 3,200 Aussie, and at the same time, Bitcoin's run has continued, and now it's over 100. It's 110k.
Yep,
100. I think
US, as you kindly reminded me.
US,
yes.
Yeah. So it's 160 to 170 Aussie per coin, and I think investors are really asking, how can both safe haven assets be booming at once?
Did you call Bitcoin a safe haven asset?
Yeah. It's my safe haven asset, not Steve's. Look,
that's why.
But without triggering Steve too much.
I think it probably could, because if you sell out of equities, normally, like you said, you go into bonds or gold, and now people are saying, okay, well, I'll just throw more into, I'll put some into Bitcoin.
Yeah.
So they both could rally at the same time.
But then you've also got the fact that the dollars are weakening as well.
Yes.
So it's global debt, dare I say it, is rising, dollars are weakening, there's a lot of geopolitical risk. People actually don't trust banks anymore. Yeah. So they're going, okay, well, I need to own something.
Yep. I understand the libertarian argument. I understand it's an alternative asset. I don't know about safe, you folks, but anyway.
Just fell out.
That's personal advice, folks. If you think it's safe, good luck to you. But I still think it's a speculative vehicle, right?
Absolutely, yeah.
Now, I will say my funny little Bitcoin story for the week. You know the guy who paid for the pizza by 2 Bitcoin?
Yeah.
Right? Mm-hmm. If he'd have held those Bitcoin, he'd now be worth over, I think it was $1.3 billion.
Hopefully the pieces.
Yeah, and the guy
pay 20,000 Bitcoin for
I
2
think
pieces?
so, yeah.
It's something ridiculous.
And if the guy, so he'd be worth 1.3 billion. The pizza shop that he bought the pizza from, its market cap is about 1.1. So in other words, he'd have been able to buy the whole goddamn shooting match.
Well, you know, what's so funny, everyone's got a story of, someone who told them to buy in 2009.
Yes, exactly right, Tom.
Even if I did buy when I was told to buy, I would have absolutely lost my way of getting those. Like, at that point in my life.
How would you have bought it in 2009? It was like...
I'd have sold it 3 days later.
Yeah.
I wouldn't have. It would have just been left on my laptop, and
you would have forgotten the password.
I don't even know where that laptop is.
Yeah.
Like, so right now, I'd just probably be depressed for the rest of my life.
Yes, I'm such a loser.
It was all there.
Yeah.
But is that, Tom, on that, is that true that if you got to use, you just said the computer.
Yeah.
But it's just like an account, isn't it? So you can
Your
log
wallet.
in on different instruments.
Yeah, it kind of depends. There's quite a few different mechanisms for it.
Okay.
The short version is it wouldn't have been on an exchange, wouldn't have been sitting on an exchange, it would have been sitting on a wallet. And that is how a lot of people lose coins.
Mm-hmm. On a wallet or on an exchange?
Yeah, think of an exchange being your Commonwealth Bank account on your phone.
Yep.
And you can log in and go, I'm going to transfer 10 grand.
Yep.
On a wallet, it's like almost a USB stick, the conventional way.
So you lose the USB stick and it's like, I'm
Yeah,
stuffed.
or all your keys are tied to this device here.
Or it's on a laptop, yeah.
Right, okay. So
Yeah.
you lose the laptop or it blows up, that's the end of it.
Yeah.
That's ridiculous.
Unless you have all your keys written down, which again, like
Is nearly impossible
yeah,
or?
in a 20-year period, most people have moved house, started like who's still keeping records of that?
So is that a little bit like, just remember what was your phone number 35 years ago? That's the key, quote unquote.
Yeah,
to
but
get
it's
in.
a lot more complicated than a phone number.
Yeah. But that's what I mean. It's sort of like, I can't remember. Oh, well, create a new account and you can get into it.
That's why a lot of people, like, there'd be a lot of coins that are just lost.
Right.
There's billions that are just lost.
Yeah. And there's like lots of people that are kind of still have them, are people who are using them for the wrong reasons.
Nefarious purposes.
Yes. So,
The wallet, that is.
Bitcoin.
Oh, right.
Yeah.
Okay.
Still Silk Road type
So
stuff.
even on an exchange, can they trace you?
Oh, yeah. But
Because
like,
one of the arguments
or
was,
Sam
I'm a
Bankman-Fried
drug
can
dealer,
run
I
off
could
with your
use
money.
it, and they never, hey, Steve, you've got 35 million in that account. How'd you get it?
Yeah, you can track it all on ledgers online. You can see exactly who's sending. Well, you can't see the person, but you can see every single transaction to every single person.
Yeah, but that's what I mean, though. They can't look at it and go, Jacob Senior is sending $5 million a week to Tom.
No, but when someone eventually wants to turn them into dollars, unless they're going to sell them to you for a big bag of cash, if you want to pull them into a bank account at some point in that chain, someone will have to,
So you
transfer
go
it
in
to a
and
broker.
say, let's say I've got a Bitcoin, right?
Yeah.
And it's 170 grand. I go, okay, I want to cash out and put it in the Commonwealth Bank.
Yep. You can absolutely do that. Plenty of platforms to do that.
Yep.
Or you can sell it to people individually.
But then they go ding.
yeah. Because you have to do KYC, know your customer stuff,
Right.
driver's license, passport.
Oh,
bank
okay.
account.
So that's where they go, Steve, could you just tell us where you got that money from?
If it came to
yeah.
it. If it came to it.
Yeah. So they may not, but they could. If the police go to Commonwealth Bank, go, this dude Moriarty's a bit shifty. They go,
There's
look at all
170
these.
grand showed up in his bank
But like,
account.
Yeah,
but the other,
okay.
unless like you've got a duffel bag full of cash that you shouldn't have either.
Yes.
You could maybe trade them with someone who
I won it
shouldn't
at
have
the
Bitcoin.
races.
Yeah.
You know what I mean?
Exactly. Yeah.
So,
But no, the sort of like retail investors are moving into gold. They're moving into Bitcoin. The minute it's seen as an inflation hedge because the markets are uncertain.
Yes. Yeah.
I'll redact my statement on safe haven assets because I'm just a bit more used to Bitcoin than most.
it's so safe that we FTX ran off with our money, but we get it back next Friday, mate.
We do. Yes.
Was that from ages ago?
Yeah, a few years ago.
Yeah. When I rang you guys and told you.
Yeah.
Yeah. We're getting it back on Friday.
Oh, good. Yeah. How many years was that?
A few years.
Oh, right. So it just disappeared for a while.
They're going to give us 20% interest on the balance. I mean,
Over a few years.
if it was in Bitcoin, it'd be worth about 400% or 500% minimum. But,
Yeah. Thanks very much. There you go.
Yeah.
All right. Thanks, fellas. Thanks for the digression.
Yep.
I'll see you all next
Cheers,
time.
All right,
folks.
Cheers. Market mastery.
As always, remember, we don't provide financial advice.